Shares of Nvidia up slightly this morning, up by about 1%, but they did fall more than 3% yesterday. That was despite the company unveiling a next generation of chips by the company's CEO, Jensen Huang. Joining us right now to talk about the key investor takeaways from Nvidia's rollout is Gil Luria. He's D.A. Davidson's senior software analyst. And, you know, there were a lot of pretty cool things they talked about, Gil. I think the Blackwell Ultra and the mechanics of what it's going to be able to do, and then what's coming after that with the Vera Rubin chip is going to be the next year coming out. I mean, some of what they talked about was pretty spectacular, but I think your point is that the market was expecting all of that.
That's right. The progress that NVIDIA continues to make is very impressive. We're talking about a generation of products that's going to be 50% better than last year, and next year's generation is probably going to be even a bigger leap than that. But what's tough for NVIDIA is that the company that ushered in the era of AI, it's very hard to come up with the second act that meets those expectations. So even though their products are staying ahead of the competition, it's not enough to impress investors, at least not until they can show that this translates to continued growth at these rates, which again is going to be very hard to do given how fast this company's grown the last couple of years.
So what's the story with the valuation of this company? It goes up and down. What's the market psychology behind this? What's really driving things? And how much of this is a concern about what China was able to do?
Well, that's definitely a factor. I'd say the challenge with NVIDIA is that the bull case is that they deliver on consensus expectations next year, in which case at 30 times they could trade at as high as $160. The bear case is this is peak demand, that there won't be a clean handoff from their top customers, Microsoft and Amazon, that have stabilized to another set of customers. And if next year's revenue declines, earnings decline, they'll trade at 20 times $3, that's $60. So there's a very big difference between the bull case and the bear case. That's why the stock's been so volatile and so range bound, is that all the evidence we're getting is that it's hard to look into next year and know for certain that NVIDIA is going to grow at all if companies like Microsoft and Amazon have guided for flat capex for the next 2 to 4 quarters. They really need a clean handoff to a new set of customers.
And with you having a neutral rating, you're not sure which case to believe.
That's right. That's right. We have to see the use cases materialize in a much more significant way. There have to be tens of billions of dollars of revenue from AI to justify the current level of investment. We haven't seen yet. China has to stay a customer for NVIDIA chips. That may not sustain. There's new customers like CoreWeave that need to raise capital, SoftBank that need to raise capital in order to fulfill the demand that's going to be left by the hyperscalers. We have to see if CoreWeave's IPO materializes. That's too much risk to next year's estimates for us to be confident that they can continue to grow at the rates other analysts are expecting them to grow.
So, Gil, Jensen Huang said the industry is going to need 100 times the computing power to fuel what AI is capable of. And it's an interesting technology. Now, I mean, it's much more advanced than anyone would have thought at this point, but it's still kind of a novelty for me. I'm wondering what the world looks like with 100 times more computing power. And Jensen Huang also talked about that you'd have AI agents that can basically do everything you need done for you, whether it's booking a flight or making travel, whatever it is. Then I start getting nervous that if it can do everything that you're doing for yourself, eventually, why would we even need us for anything at that point? And I think that's the fear that some people have about unbridled technological advances. Do you know what the world looks like in 10, 20, 50 years?
Well, I think that's the operative question. What's going to happen the next 1, 2, 3 years versus what's going to happen in 20, 30 years? In the 20, 30-year time frame, yes, this type of technology will be able to replace a lot of the manual tasks, the administrative tasks that we're doing. We're all going to have a personal assistant that does all the little things around us. We're still going to have to do the thinking, the imagining, the managing, but all the manual and administrative tasks that we're currently doing, we're going to be able to outsource to a computer, to an agent based on this technology. In the next 1, 2, 3 years, we're mostly going to be using it for chat, for writing code, for self-driving cars, for things that are helping us become more productive, but not really changing our lives in that material of a way. And then in terms of the 100 times need for compute, he was really referring to a micro aspect of this. The reasoning models that are being introduced require a lot more compute when we ask them questions, but we don't need those models for everything. We need those for complicated research questions. So that's only one type of application that's going to be very compute intensive. In the short term, the models are actually getting smaller. The types of questions we're asking now will be able to be solved by much smaller models that will eventually be on our phones and computers that we won't need this massive infrastructure to get. So in the short term, we're going to make incremental gains, be incrementally more productive. But longer term, there is a world where a lot of labor is done through AI, and we have to do a lot less of the things that we find boring and tedious these days.